Hello everyone. This is Brother Ovin from Black Sub Group, and good morning to you all. So it's always morning because that energy is always fresh. So today we're gonna speak about the full market breakdown. First of all, I'm gonna take you guys to my previous video on GBPUSD market breakdown. You're just gonna see the results of the breakdown video that we had, and I'm going to extend further and talk about US oil and what I see happening with the US oil within this week. So I hope you enjoy the video, and I'll see you guys in a bit.
So guys, this is Jason Stone, the millionaire mentor, guys.
Market breakdown on the cable or the GBP USD. We see that price went exactly as how we anticipated in terms of that corrective structure, that corrective phase before that bullish movement to the upper highs or the upper liquidity regions. Um, so I'm going to pull out last week's video right here. So this was last week's market breakdown on GBP USD. Welcome back for those who don't know. Nice. Moves really have we're going to take. So let's stop is. So yeah, you can see this is the video whereby I was explaining the type of trades that we could possibly take within this week, and that was the short trade that we came and got it just few pips above this entry anticipated entry region due to that price action, as you have seen on that what the market did around these liquidity highs. So after that, we had that a nice tap of the take profit to the absolute T, and you're going to see that within a pipet away, that's when our take profit was taken, and that's where we anticipated to get the longs, but yet I didn't call the longs due to price action that was happening around this region. So I knew this was a liquidity region, and in fact, anywhere within that liquidity region, you know that it is characterized with high wick rejections. So that was something anticipated about the high wick rejection. That's why a limit order would possibly work here perfectly. But yeah, I didn't call the trade because I just wanted people to enter into the trade when the momentum has already kicked in. Quite high. But still, a 1.3 trade is good. And then bring up those balls. All right. So that was last week's preview. Now this is what I anticipate and see within this week. We're going to have that nice pullback towards these bottoms before going to take out those liquidity highs. So this is a nice trade. It's a 1.6, I mean 6.14. We're aiming for almost 450 pips. Now enough for the cable, let us go and talk about the US oil. So this is the US oil chart on a 4-hour basis. We're going to start with the weekly basis, so as we identify what we can see coming up next in this currency pair, right? Okay, so we just have to see what kind of structure we're facing. All right, so the market structure in this currency pair, in this commodity, is a downward movement. So you can see these highs to the lows, highs to lows, creating that highs to lows, but possibly we have reached those yearly lows whereby in no reason or in no time we could just barely break these lows. Okay, I'm gonna take it quick. So as you can see, this is like the lowest whereby oil has ever been. Possibly coming to tap these lows, that could be a possible move, but breaking these lows, that is a complete depression. Okay, so it is not something that is easily done or will easily be faced. When you for those people who are trading trend lines, you can see that we have had that nice break of the trend line, a corrective phase, and that nice impulsive phase to the downside. So what we're going to look at is where we're anticipating price to come and do a retest, because now we know that this is a downward movement, right? And you can see downward movements for oil, the impulsive movements, I mean, because this is a downward movement. So the impulsive movement or impulsive phase on this downward movement, I'm speaking about these phases. So you can see that these phases are characterized with a very high momentum, okay? Very high momentum. You can't compare these, how the candlesticks are formed in these phases compared to these currency pairs, okay? So this commodity is a big mover. So you have to be very careful when you want to go against that trend. That means you want to trade a corrective phase in such a commodity, or a graphical representation of a pair or commodity that has such movements, such impulsive phases. Okay. So after saying that, we are going to identify regions whereby we're going to term them as our zones, finding regions of demand and resistance, okay? Sorry, demand and supply, regions whereby buyers and sellers have that more concentration uh, than the previous region. So we can just simply tell from these liquidity laws that this is a very important region that we could anticipate price come test before coming to take out these yearly lows. Okay, so that's just a quick glance of the chart. This is another quick glance, so you can see how we can get these regions easily. Yeah. So when we come to the weekly, that is when we're going to grasp those important regions. Okay. So you can see that this region is actually very important. Let me do this. That region is actually very important because you can see when price came and tapped these lows. Okay, so this is the region whereby bulls are very strong. Right here is the region whereby bullish orders first entered into the market, came all the way towards this region, then bearish orders entered into the market here with full momentum, right? So I believe you can all see this. So bullish, bearish, right? So after bears came down all the way to these bottoms, we can see that bulls entered, bulls entered. Simple, right? Bulls entered, bulls entered, bulls entered here. Okay. So remember, this is a weekly basis. So it is something that not that much of these are a lot of pips, okay, a lot of pips between them. Okay, so we're going to go to the daily time frame and see why we still anticipate that minor move to the upside before going further to the downside. So when you come to the monthly, sorry, let me take you back here. Okay, when you come to the monthly, this is when you can see that these were the liquidity laws that were taken out. Yes. Those are the liquidity laws that were taken out. Now let's go to the daily and see what those laws are doing. So you can see that these laws that were taken out have shown us, they have showed us that on the weekly close, we had that nice engulfing candlestick, right? So on this weekly close, we had this nice engulfing candlestick. What we wanted to see around these liquidity levels is that weak rejection. You see this weak rejection here? That is what we wanted to see happen here. These weak rejections here, weak rejections, weak rejections, that is what we wanted to see around this region, and that means we wanted to see that bearish weak rejection of this bullish candlestick. So if we had noticed any sort of weak rejection, would have waited on these lower time frames to come and get maybe a double top in order for us to go short. Okay, so this short was valid, but still we're still having that nice bullish pressure to the upside. So we can't possibly just ignore the fact that this engulfing candlestick managed to engulf this previous bearish candlestick and almost 75% of this very nice momentum bearish candle. Okay, so we can't ignore that fact That is why I'm saying bulls still have that nice movement to the upside. So after this video, you're going to learn something which is very important, and I only teach those people from uh, the premium members. So hopefully this is going to boost your morale in terms of trading. Okay, so we can see that bears came down. This is the next regional high that we're looking for. Pop highs, lows, lows, highs, lows. So we came and created those same lows, right? As you can all see, we came and created these same lows around here, same lows, same liquidity lows. Yeah. So same lows simply tells us that nice double bottom. Okay. So this is just a mere retracement to the downside, and that is why we can see prices moving in this form. So for in an impulsive phase, you see that lots of bullish action taking place, right? You can see in this up higher time frame, the daily time frame, lots of bullish action taking place. Bears entered here, okay? You can see bears entered here in this candlestick, okay? Just studying this candlestick wicks opening and closings, okay? So bears entered here in this candlestick, bulls entered again here, okay? Sorry. So you can see bulls entered again at that price level, okay? So we can see that this was on a nice bearish movement, but then what defined this bearish movement? So after this bearish movement happened, we had that nice bullish push to the upside, but bears came down. Then bulls came into this candlestick. Then that means this is the price action that you're looking for, right? So this is the price action that you were supposed to look for. And if you know how to trade it, that is when you're going to take your longs. That is just the proper way of trading. Okay. So after you seeing this nice price action, that means the momentum candlestick is this one here. Okay. So excuse me. Sorry. So this is the momentum candlestick. Okay. So what does that tell you? That tells you that this region here, this is known as the demand liquidity region, meaning that region whereby the demand actually entered a lot into this market. Okay, I hope it makes sense. So this is the region whereby it's known as the demand liquidity region. Okay, I don't mind about the spelling because it ain't money. So this is the demand liquidity region, the region whereby if this retracement was to overextend, this is the region where you want to take longs. Okay, so if it manages to break here, you want to go in long here. Okay, so you come to notice in these lower time frames, those people who maybe trade using the fib will come to understand that this is within that same range that they are looking for. Okay, and after that you can come and see that this, for those people who are trade structure, okay, you can see that this is a nice this guy just want to take my money. Okay, so this is the head, I mean what is it called, the left shoulder, right shoulder, I mean head and right shoulder here. So if you want to trade structure, yeah? So this is the head and shoulder pattern. So that is what we're waiting for. So now I wouldn't want to go long here, okay, because I still want to see this nice push to the downside till here. Then we have that nice long trade, okay, towards these regions. So what I'm going to do now, I want to take a short trade around these regions, okay, possibly there. Give me that nice downward movement. Okay, let me just give it a nice breathing space, okay, just the beginning of those liquidity lows. Then long trade, okay. And remember, tomorrow we're going to have the oil whatsoever long trade towards this region here. So you can see this is a 1 to 3, 1 to 4. So it's not bad. These are all good trades, all good trades. Okay, possibly even come towards these regions here. So that will be 1 to 8. So we have to first see how this oil trade is going to happen, because okay, yeah. So want to see price coming. Take out these highs, because now if you come to look at these are the downward movements. Okay, you can see this nice double bottom, upward movement to just the previous highs, and then price started falling. So our previous highs are these ones here. Okay, then price would fall. That is what I can see on oil. And for those who are in the premium group, you can see that this is a nice retracement for those who know how to trade there, engulfing candlestick. So it's over 75% retracement. And I'm going to take this short because this is a very nice downward movement. So this short is actually at some point kind of more important than this, even if this is the trade that provides more reward. But this short is important and will possibly have more momentum. So if we face any sort of nice price action that just gives us that nice significance outlook telling us that bears would enter in this price region, then I would love to take this short and possibly just hold it, leave it TP open and hold it and see if we're going to have that nice bullish action around this price level. So if we don't, we are still going to hold it, possibly going to break below. Okay, so if we get that nice bullish action, close almost 80, hold one, then when price goes up, break even. If price comes down, you're safe and you still have these shorts still in profit. If it doesn't, then if price breaks that momentum seeker, if it breaks above, come retest, you close this one, maybe re-enter long and continue to take it to the upside. So that is just a simple way of how you can execute and marginalize in this kind of trade. So yeah, I hope this video makes sense to you, and share it as much as you can so as we can, enlighten more people and show how to trade the forex markets. And remember, you don't have to trade a lot. And this week I only have, one trade. I had 2 trades, closed 1 trade, and I still have 1 trade till now. The market is moving. It's not that sluggy, and that is good. Hopefully it's going to continue moving till the end of this week, and possibly we could catch some good pips and good trades without, having stress, so that we have that psychological stability throughout the week. Best of luck. Trade easy and use risk management. Stay at home. Bless up.